President Trump, of course, ramping up the trade war with China, calling on the U.S. Trade Representative to increase potential tariffs to $200 billion. Mike Santoli joins us now. He's here to talk about the market impact of that ever-changing trade policy. Not quite sure where it stands right at this moment.
Yeah, I mean, David, there's no way to paint it as anything but a net negative, I think, for stocks in the short term. But it's not the only thing going on, and I do think the context matters here. It's obviously a downside catalyst. It's a trigger. It's a psychological overhang for the market, but it also feeds into some other anxieties that have come to the surface, which are the slowdown to a slight degree in overseas growth, the stresses in emerging markets that have already kind of been a little bit top of mind for investors. So I do think that trade wars as a threat to global trade flows at a time when you're already worrying about if the rest of the world is sturdy or not and the currency moves are not very comfortable is having a little more of an effect than you would otherwise think. The rally, too, had stalled coming into this area. We came right up to a level where it seemed like we were going to threaten those March highs in the S&P 500. You kind of hesitated there, did not have a lot of momentum behind the move. So it almost feels like the market's grabbing for an excuse in the form of this incremental trade announcement and selling off. I think context also matters when you look at the magnitude of the losses, right? 1% down today in the S&P. We're about 1.5% off the recent highs. We're back to levels we were at 2 weeks ago. This is a chart of the U.S. market against the developed overseas markets and the emerging markets. So you see that the U.S. market, the white line there, has been hovering and outperforming and kind of resisting the downward pull of the rest of the world. This is in the form of the ETFs. Obviously, we're succumbing a little bit to that, or not quite catching down, but obviously the weight there. So that's why I think the uptrend hasn't yet been threatened. It's much more about what's next, what currency moves this drives. We keep talking about the product impact. What products is China going to target, or companies? What if they let the currency devalue? What if it becomes a little more of a broad-based response that says, okay, we're going to see who has the higher pain threshold? That's been the threat.
There's also the effect of the tax cuts, which apparently was a point of discussion between the president and Tim Cook, that they could be offset by tariffs, or maybe we're just waiting for the real juice to kick in, right? That's the bullish argument in the back half.
Oh, yeah, you totally don't know how much of the total fiscal stimulus and tax cuts this is offsetting or not. Yeah, I mean, and so, some people would argue that's why it's a good time to do this. Others will say, well, you're kind of squandering that economic momentum. You're blunting it to some degree.
That chart that you showed us where you see EM down as much as it is.
Yeah.
I mean, that could suggest that perhaps what's driven any sell-off is fears of rising interest rates.
Absolutely. It's definitely, and that's another part of the context, right? The Fed is raising rates, tightening financial conditions, and also doesn't seem particularly worried about changing course based on what's going on overseas, right? Jay Powell's testimony, his press conference the other day, he didn't really want to give a lot of ground on that and say, well, we're watching the global situation. So if you have that setup where the Fed is going to be continuing to tighten, the rest of the world kind of has to deal with it, and then you have the trade flows on top. I think that's one of the reasons for the issue. But again, we've had big intraday rallies the last two sessions. I'm not saying we're going to get it again, but I don't think this is all about, now we have an escalating trade battle, game over for
But are we
stocks.
supposed to take away from it that foreign markets suffer more than ours do as a result of any potential trade war? Given
That's been the case.
Important, but as a percentage of our overall economy, not as important as it is for many other nations.
That's the way the math works. Anyway, I don't know if you consider it victory to say, well, the Chinese market's down more than ours.
Right.
But yes, that is the reality so far anyway.
Mike, thanks.
Okay.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.